What's up, guys? Today I read some news that made me absolutely embarrassed at my generation's investing habits. So like any good millennial, what's my solution? It's time to start a resolution, change the world, and change your mind. But as always, before I go any further, be sure and smash that like button and also subscribe to the channel. Don't make me go full millennial and start boycotting and protesting in the streets, because nobody really wants to see that, and just do the right thing. So today I uncovered some very interesting information on the investing habits of my fellow millennials. And I was pleased to see that over 77% of millennials believe that they're investing their money the correct way. But unfortunately, most of them are wrong. In a recent study done by Bankrate, they found that only 23% of individuals aged 18 to 37 feel that the stock market is the best place to invest money that they don't plan on using for the next 10 years. So while I was a little bit concerned at that statistic, I thought, well, okay, the stock market isn't the only thing that you can invest your money in that will give you some pretty good returns on your money. There's also great things like real estate and also other investments that can also be very lucrative and provide a safe investment for you. But unfortunately, they're not investing in real estate either, or any of the other good alternatives. So where is it that millennials feel the best places to put their long-term savings? That's right, they're keeping it in cash. Cash, like stick it under the mattress like grandma and grandpa used to do. So not only do less than a quarter of all millennials feel that the stock market is a good place to put their long-term investments, but an even greater percentage feels that it's best to just simply keep it in cash. And I thought that this was just such a stupid idea. I'm sorry, but it's just a stupid statistic and a stupid idea that people actually think that keeping their long-term funds in cash is the best place to put it. So I wanted to understand why millennials feel this way and really get down to the root cause of why they feel that keeping their money in cash is the best solution for them. So it caused me to do some reflecting in my own history, and I think I've uncovered the reason why. When I was in college pursuing my undergrad degrees in finance, what was going on those days? You guessed it, it was the Great Recession. The housing market was bottoming out and the stock market was crashing. So as I was entering into my adult years, this is all I heard about in the news, of more people losing their money in the stock market, and people losing their houses and foreclosing, and banks failing, and the world coming to an end. It was horrible, and of course that led to a lot of distrust and absolutely no confidence in investing money in real estate or the stock market. Fortunately, I was able to realize that this turned out to be a wonderful buying opportunity for anyone entering into the stock market, and it allowed me to open up a lot of positions at extremely cheap prices that I actually still own today. But unfortunately, there's a lot of my fellow millennials out there that don't have this knowledge. They weren't brought up with the same type of education, and they still have these memories of the stock market crashing, people losing their homes, banks failing, and just an overall dark cloud over anything that has to do with investing. So trust me, I get it. If you're someone that was entering into the workforce around that time, and you opened up your 401k and opened up an IRA like any savvy investor, but you experienced all your investments basically get cut in half and everything fall apart, I can completely understand why you don't want to enter into that market again, or you feel like it's just gonna happen all over again. But here's the thing, by holding your money in cash, you're actually doing more damage to yourself than you would be if you would invest those funds and we actually experience a recession in the future. And I have a very easy example that's gonna illustrate this. So bear with me, I'm gonna show you the numbers. I'm gonna put my financial hat on and I'm gonna run the numbers for you and show you exactly what I'm talking about. All right guys, so let's walk through this. And those of you who are my dedicated viewers all the way back from my very first video, I'm pulling out the same cheesy example of Jack and Jill, except with a little bit of different numbers this time just to fit my example. But here we go, I'm gonna lay it out for you. So we have Jack and Jill. They each have $50,000 that they're going to invest for the next 30 years. So Jack decides he's going to invest his $50,000 in an index fund that tracks the S&P 500. And we know that basically over the last 90 years, the S&P 500 has returned something around the average of about 9%. And if you adjust that for inflation, somewhere around 7%. So We're just going to be conservative and say that Jack gets an average return of 7% on his investment. But Jill is the stereotypical millennial these days, and she is going to just put her $50,000 in a quote-unquote high-yield savings account that she found online that's giving her a whopping 1.5%. So at the end of the 30 years, Jack has about $990,000 in his portfolio that he can now play around with and have fun with during his retirement years. And I rounded the numbers just to kind of keep them nice and clean and even for you, but basically it's about $990,000 that Jack ends up with. On the other hand, Jill, with her awesome 1.5% high yield savings account, she now only has $78,000. But unfortunately, that's really not the true tale of the two stories here. And because I'm a finance guy, I'm going to put on my finance hat and nerd out a little bit and start talking about future values and also incorporate inflation for this. So what we're going to do is see just how much inflation erodes your money over time if you simply have it in cash. So basically what you'll see here on my super awesome whiteboard is that Jill actually lost money when you think of it in terms of future value. So her $50,000 today in 2019 is actually almost cut in half whenever it comes to 30 years later down the road, because inflation that comes at about 2 or 3% just erodes all of that money away. So even though it may look like she has $78,000 in that account, her spending value and that buying power of that dollar has eroded over the years because inflation is just absolutely eating it up. So here's the bottom line with this, guys. Investing in 2019 has never been cheaper or easier than it is right at this very moment. To all my fellow millennials out there, I get it. I understand that things are expensive right now. I know that student loan debt is going through the roof. I understand that you're more present oriented than future oriented. I understand that it's easier to rent than it is to buy. And I also understand that based on your past experiences from what we went through 10 years ago, the stock market looks like the boogeyman. But don't let your past experiences spoil your attitude on investing, because the real enemy is inflation. And the only way inflation can really do major damage to your savings is if you simply keep it in cash or in a savings account that's not combating against that inflation. Investing in the market is the safest and easiest way to protect against inflation and also allow compound interest to generate wealth to allow you to have a secure future whenever it comes to your retirement years. Another alarming statistic is that over 41% of you have absolutely no retirement savings, and that absolutely has to change. I understand that the experiences that we faced 10 years ago has a lot of fear in the stock market, but you have to look at the facts. Over the last 90 years, the S&P 500 have averaged returns of about 9%. And that's taking into consideration the Great Depression and all the ups and downs that we've experienced over that time. So even if there is another recession on the horizon, which will probably inevitably happen sometime in the future, the numbers show that if you're a long-term investor and you have those funds in the market over the long term, you're still going to get those average returns no matter what happens. So to wrap this video up, please, millennials, I'm begging you, don't be the face of the generation that all retire poor, because we absolutely have the resources to make a change. It truly doesn't take very much money to generate impressive wealth for your retirement years, because the best part is we're still young. We have that time on our side that allows compound interest to continue to build years and years and years down the road to where we can have a secure retirement. So that's all I have for you tonight, guys. And remember, please smash that like button and subscribe to the channel if you haven't already. And please feel free to comment below and share your thoughts with me. I absolutely love engaging with all of you and hearing your feedback, so please do so. As always, guys, until next time.